Hey there, it's Mike Wise with CMG Home Loans and your weekly mortgage update. It's been an uneventful start to the new year as far as mortgage rates are concerned. Next week is a bigger week with data that's going to come out that may be market moving. So wanted to let you know I am still working on my studio and we'll have the lighting and everything worked out a little bit better next week. So hopefully you'll have a better update next week. Wanted to show you a little bit about the cost of waiting on on buying a house. And what I'm going to show you is basically about $45,000 benefit on this particular transaction. And so what you're going to see is a gain, appreciation gain of about 4.2%. So if you bought a $1.2 million house, you're going to see about a 4.2% appreciation gain. That's about $53,000. And you're going to make about $4,000 in cumulative, basically monthly mortgage payments, the difference between buying versus renting at this point in time. And then what I'm going to show you is it's going to cost you $4,000 to refinance. So once you put all of those into play here, you're going to make about $45,000 if you purchased a house today. And I'm not going to go into all of the numbers, but here's the appreciation going up at 4.2%. The payment difference between the renting versus buying and using that payment now. So let me clear the screen here. And so this is going to go through all of the numbers, and I'm not going to go through everything, but basically you buy at the 1.25 million. In a year from now, it'll be $1.3 million. And the interest rates will go from 7% down to 6% in a matter of a year. And so what's going to happen is your payment, your monthly principal and interest payment will go from $6,600 down to $6,200, saving all of that money when you do refinance on that. So your payment will actually go down and the purchase price will go up. So if you wait a year, you're actually going to buy at $1.3 million versus buying now at $1.25 million. So a big difference there. It is better right now to buy with the lower interest rates. Right now, the interest rates, you can see here that it's been a basically sideways path for the Treasury prices, which means the same thing on the mortgage yields. It's been a pretty flat, straight across there, and the yield on the 10-year Treasury is at 4.57. It went all the way up into the 4.6s here, and it's going to start to come down. We start to see as the new year starts, but next week we'll see. So mortgage rates have actually come down to 7.07 from about 2 weeks ago at 7.14%. So yes, they are starting to come down a little bit further here. So one of the things that I wanted to show you here is active listings. So in the real estate market right now, the number of listings, it's actually hit a high, but you can see that year after year, that's what it does. It hits in December, the end of the year, it starts to go up, the inventory, and then after that, in the spring, the inventory starts to drop as well. So, but you can see that over the last couple of years, the inventory has been very, very low. So this is 2019, this is pre-pandemic. The inventory levels were way up here. Now you can see that they're dropping pretty significantly from here to here. And so that's a matter of people holding on to their houses a little bit longer. But at the end of the day, what I'm trying to show you on this is that inventories, now is a great time to buy because the inventories are a little bit on the higher side, and there's a little less competition out there. So as you're going out there and buying houses, you can probably get a better deal on a house right now. And then in a year from now, like I showed you on the previous screens, you can refinance and get in at the lower interest rates at that point in time, make about $50,000 of appreciation on your house. So otherwise you're going to pay a little bit more for the interest rate or for the house in a year from now, because the interest rates come down. And one of the things in our industry is that for every 1% in drop in rates, there's about 5 million more people that are going to be able to afford that house now. And so your competition is going to go up by that many people that are going to want to buy that house at that point in time. So interest rates, you know, they're on the high side right now, but if you can afford to buy a house, now is a great time to buy a house. One of the things that I'm going to focus on this year is the all-in-one loan. And on this all-in-one loan, I'm going to show you how you can save money and pay off your loan much sooner than on a regular 30-year fixed rate loan without making any changes to your weekly or monthly budget. So in this scenario, I'm not going to go into all the details, but here you're going to save about $450,000 in interest and pay off your loan in 16.7 years versus the 30 years on a 30-year fixed rate mortgage. So if you're interested in this, give me a call. I'd love to talk to you about the all-in-one loan. Otherwise, welcome to 2025, and I hope you have a great year. We'll look forward to helping you with your mortgage financing in the coming year. Have a great one, and we'll talk to you next week.